Good morning. Today is Monday, January 13th, 2014. Back again with another edition of Commodity and Equity Chat. First, we'll be talking about the Nifty levels. 6130 to 40 has been a very strong support level on the spot Nifty for the past 3 to 4 weeks, unable to sustain below. On the upper band, 6230 is a strong resistance where it's not able to break through. Each time it attempts to break through those resistance zones, selling keeps coming in, hence unable to break it. So the band is expected to be in the range of 6130 to 6230. A fall below 6130 could test 6050 and 6000 in the sessions to come. On the other hand, intermediate resistance above 6230 is at 6260 and positional resistance at 6300. How does one trade the Nifty? Overall, we feel that the market is on an uptrend. The Nifty is on an uptrend, and what we are seeing is sideways to small corrections on the overall upside. Buys can be initiated above 6300 only, or on dips at 6000 to 5980. Either of these give an opportunity for fresh longs to be entered into the market. Overall, the market now seems to be in a 80 to 100 point narrow band, and overall we feel that still sell-on rises could come about, as selling seems to be coming at every rise closer to the resistance. Now, tech and pharma seems to be the outperformers yet again, as we've been emphasizing over the past few sessions. On any corrections, entry into longs, bulls could overpower in as far as pharma and IT stocks are concerned. Recommendation would be to enter into strong mid-cap stocks as far as downsides are concerned when the market enters into the 6030 to the 6000 zones. We would recommend you to get into mid-cap pharma and IT, as also other blue chip companies on the downside. Bank Nifty, as we've been forecasting for the past few sessions, broke below the resistance of 11,050, closed around the 10,830 mark, likely to remain weak and test the supports of 10,600 to 10,500, which is a strong support. Resistance is now at 11,200. The IT Sensex has been overall positive, given the positive info results came out on Friday last week. Closed at around the 9780 mark. Strong support is now seen at 9,600 and resistance at around the 9,900 marks. Buy on dips is recommended as far as tech stocks are concerned. INR is trading in a tight band of 6150 to 6250. Overall, if we see that the Nifty is likely to come down, this could see in due course weakening in the INR. Weakening the INR could test 63, a break above 63 could test up to 6380. As the INR weakens, export-oriented themes are likely to flourish as far as equities are concerned, as also the tech stocks. Aggressive buying into both these sectors could be entered into on corrections in the market. Now, the RBI credit policy likely to come out on January 28th, and hence rate-sensitive stocks are best to be avoided at this point of time. As far as US economy goes, the US dollar index trades at around 80.60. The data on Friday were quite positive in terms of unemployment numbers. Okay, so markets are back again to talking about the downsizing as far as equity stimulus is concerned, and that's haunting the market again and likely to dominate the markets till the next FOMC meet comes out in the next 30 days. Talk about the individual stocks. Gold is trading now above the resistance mark at 1250. Buy is recommended at around the 1250. Add further buys at around the 1240 marks with stop loss below 1228 for targets of 1270 and 1290. Now, selling is likely to come again at around the resistances at the 1270 to 1290 mark, as we've seen over the last 45 days, unable to sustain above the $1,300 mark. On the MCX, trading at around the 29,000, resistance is at 29,200 to 350 and support at 28,800. Silver is now trading at $20.36, positive only if it sustains about $20.50. Add buys at about 2050 with stop loss below $20 for target of 2150. As far as the MCX goes, trading at around the 44,800 mark. Fresh buys can be initiated at current levels. Add fresh buys up to 44,500 for stop losses below 44,000 for target of 45,500, 46 and 46,200. As far as bullions are concerned, short-term strategy would be enter buys on dips and meet the resistances where fresh wave of selling could come around in the sessions to come. Crude is now trading at around the 92.70 mark. Support is straight at 91.3 and resistance at 93.3. On the MCX, trading at around 5,700. Looks weak, sell on rises would be the best advice. Sell at market on and add further sells on rises at 57.50. Stop above 58.10 for targets of 56.50, 5600 and 55.50. Natural gas, as you have seen, has corrected sharply over the past few trading sessions from around the 276 levels to around the 248 levels, now trading at around the 250 to 251 mark. Buys would be recommended at current level, add further buys at around the 249 with support below 245 for testing 256, 260 and 262. 248 is a very strong level. If it sustains below 248 on a closing basis, could test supports of 245 and 244. Among base metals, selling was seen across the board over the past trading session on Friday. As far as copper is concerned, closed around the 456 mark. Sell on rises is recommended at market at around the 456 to 457. Add further sells up to 460 for stop losses above 463. For testing back supports, strong support is now seen at 451. A break below 451. The next targets could be 446 and 442. Nickel is positive only if it sustains above 860. Buy above 860. Stop loss below 850 for target of 870, 880 and 890. As far as the other base metals are concerned, lead and zinc looks weak. Sell on rises is the strategy. Lead is weak below 130 to test 128 to 126 with support above the 138.50 mark. Zinc is weak below 126 to test 123 to 121 with resistance above the 127 mark. Now, overall, wait and watch would be the best approach, especially in terms of INR. We need to see how the INR is likely to open up at the open of the week. The southern states this week are expected to have some holidays on Tuesday, Wednesday and Thursday, as also in Punjab. Trades are likely to be less, being a festive week in South India, especially in Tamil Nadu. Have a safe and profitable trading week. Please visit our website and blogs at www.akshayaship.com or Lotus Advisory Services. Visit our Facebook at facebook.com/Lotus Advisory Services. Have a safe and profitable trading day. Thank you.